May profits be upon you. Welcome to another weekly market forecast. We're going to look at the indices. Let's just jump straight into it. Why don't we? There's no reason why we shouldn't. Okay. What we have on the monthly is we can see easily that price has made a high, pulled back, and then broke that high, creating this beautiful market structure break to the upside. All right. We are in a bullish market. No doubt about that. However, there is a pullback in progress. And over the last couple of months, to include this one, which will end on Monday, it looks like we are in a pullback, right? Now, some people are going to measure this and say, looks like we might be in a correction of some kind. Okay, yeah, a correction is correct. Anything less than 20%, that constitutes a correction. But after 20%, then we start talking about a bear market. All right, we're not in that territory right now. Right now, we are at what 11%, almost 12% of a correction so far. We can go all the way down to the low of this bearish candle here, and we're still at 17%. All right. And this is where I would definitely think that price will probably turn around and find support, because this is the area of the breakout, and this is where price usually does that. I mean, you watch it do it all the time. So that's where I'm at on that. Okay. As far as this downturn here, where do I think it's going to end? It could end here. All right. Could end between here and the 50% of this wick. All right. That was supposed to be a straight line, this wick here. All right. And that'll put us at the top of this bearish candle, or what I call an opposing candle. When price has a nice push up to the upside, when it finds support, it's usually at an opposing candle. Okay. And we're right there right now. But I like to look at lows. I like to look at lows and fair value gaps for the price to turn around. Let's go to the weekly time frame. All right. And what we can see, 1, 2, 3 straight weeks of drop, right? And then we create a fair value gap, a bearish fair value gap. Price continues bearishly. All right. And where do we stop? Where do we get this respect candle from, this respect wick from, once it hit this low? All right. And when I pointed this low out, I said, once we hit that low, I'm looking for price to pull up. And that's exactly what it did. Right? It created an inside candle, all right, which is an area where you start to think, hey, price could turn around here. All right. And where, depending on, well, this is a different strategy. This is a different trading strategy, but depending on where that inside bar is, this is an inside bar in relation to the previous candlestick. If it's towards the upper half, then I would be looking for price to continue up higher. If it's towards the bottom half, I'd be looking for price to break out to the downside. This one's kind of smack dab in the middle, and you remember me mentioning this last week. Well, what price did was it opened here. All right, that's a gap. All right, there's a small gap in there, gapped up. Right, price pushed up into the bearish fair value gap, and then you see the response price, the reaction here is bearish, right? And what did it create? A bearish engulfer. It took the high and the low of the previous candle. That is a very bearish indication for me, all right? And I'm looking for, you see how price didn't leave a wick at the bottom when it closed and left this wick of respect from the fair value gap, the bearish fair value gap. This is also indications that price wants to continue lower. All right. Now, where are we going? See this low? Once this low took out that low and pulled back into this fair value gap, which is an IRL. That's internal range liquidity. What price does, it makes lower lows, lower highs, lower lows, lower highs, lower lows, right? And when it takes out a low, that these are the external points of liquidity, where there are stop losses here for people who are taking longs. Okay, what the market does is take out these external range liquidity and push back into an internal range liquidity, a fair value gap. All right, could be an order block as well. All right, and then continue lower. This is what creates the lower low, the lower high, the lower low, the lower high, the lower low. It comes back to take out that external range liquidity, and once it does, it pulls back into internal range liquidity. And so goes the process of making a trend. All right, this one happens to be a bearish one. Okay, so I believe that price is heading towards this low now, an external range liquidity point. And from this internal range liquidity point, I'm looking for price to continue down. That's it. All right, once it comes down here, where will it stop? It'll probably stop somewhere within the 50% of this large wick here. And that's what I'm looking for, right around 5,400. That's where I'm looking for price to go to. We'll see what happens April 2nd, because that's going to be a monster catalyst. It may start the market to push up. It may start the market to push real hard to the downside. We're going to find out. But we also have NFP on Friday, so that's something to look out for. But right now, my bias is bearish. Okay, and if we go to the daily, you can see the targets. This is my what do you call it? Sell side liquidity target down here. It's an external. That's external range liquidity. We've already tapped the IRL, the internal range liquidity, and here we come. We have a break of market structure here, and I am just looking for this to continue. Yes, look how it continues. Look in this area here for a bearish fair value gap to form, and we'll look for another 2 candle pullback into it so that price could continue lower. Okay. Yeah, that is the S&P. If we go to the other markets, its sister markets, the NASDAQ, we can just look at the weekly. You can see it's the exact same situation here. This is what I have in these notes. That's the exact same situation there. It's respecting bearish fair value gaps. That means bearish premium arrays, and we are on top of that low already. That I'm looking for that low to get taken here in the NASDAQ because it's considerably weaker than its counterpart, its partner, sister, the S&P. You can see how high it is from that low. All right, and you go to the NASDAQ, you can see it is right upon it. All right, I'm looking at this low. This one hasn't been taken yet, unlike the S&P. Got it? So I'm looking for this low to be taken. All right, and we'll see if we create bearish fair value gaps along the way in the next candles. All right. There's no wick on the bottom here, so I'm thinking that there's going to be some follow through, some continuation to about the midsection of this candle here, which is right around 18.6. All right. So 18,600. So well, that's what I'm looking at right now. That's a bearish one, bearish outlook for the NASDAQ. And you see, I gave you a point where I think it's going to go. If we look at the Dow, if we go to the weekly, this one's a little more interesting. See that I have their previous weekly low is the sell side liquidity target, the previous weekly low. I like the candle here. I like last week's candle, the way it closed, no wick on the bottom, high wick on the top, respecting the weekly fair value gap that was a little further a target for the Dow in relation to the NASDAQ and the S&P. But I said, we're probably going to hit that because that's the way the Dow moves. And yes, it did hit it, and it showed respect, and we're on our way down. We have this target and this target. We've already hit the September low over here. So the next target will be the low of, well, we're going to make a new low for March. Well, excuse me. We'll head for the low of March in the Dow. And where will it stop? Probably somewhere inside of this wick. If we take this low, I'm thinking that this low here, right at 40.56, I'm thinking right after that low, we're probably going to get a turn up, all right, into an internal liquidity target. And so I want you to watch the way the market breaks these lows. And if we see a pullback of sorts, and then using a fair value gap that was developed to go lower, we'll see those likely on the daily time frame. You see how long this is? All right, so we already have two candles, 1, 2. We just need a third candle. If it comes up that low, comes up like that, then we can use this as a fair value gap. The market can use it as a fair value gap, push back up into it, and use it to go for lower prices. All right, we're going to play this one very carefully. Just remember that we have the NFP on Friday. We have a lot of news coming out this week, and I want you to trade carefully. All right, and make sure you hit the like, and I will see you in the next video. And thank you again for watching. I'll see you in the next video. Be careful this week, and keep your eye on the news.